Traders, welcome back. Compound coin is looking really interesting right now. Looking closely at Compound, the market is currently in a clear uptrend, forming a series of higher lows and higher highs. This shows that buyers are still in control and the overall momentum favors the upside. But as always, even in an uptrend, the key to trading successfully is identifying the critical levels where price can react, because this is where smart money and retail traders collide. Right now, the most important level to watch is the resistance level around $36. This is not just a random number on the chart. This level has been tested multiple times in the past and has shown strong reactions, which makes it a zone of high significance. Whenever price approaches $36, sellers tend to step in and create rejections, showing that they are defending this area. Conversely, if buyers push through and break this level, it often flips into support, creating a potential bullish continuation. Currently, Compound is showing a strong rejection at this $36 resistance level, indicating that sellers are actively defending the zone. But here's the key point. We don't rush trades. Patience is essential. We wait for the candle to close and confirm the market's behavior at this level. Candle closure gives us confirmation whether sellers are still strong or buyers are gaining control. Jumping in before confirmation is one of the fastest ways to get stopped out, especially in a market where levels like $36 are closely watched. Here's how we are monitoring Compound now. Scenario 1. Price respects the $36 resistance. If price comes back to this resistance and forms a bearish candlestick, like a pin bar, rejection wick, or engulfing candle, this signals that sellers are controlling the market. This becomes a high probability sell setup. Entries are typically taken around the resistance level, with stops placed just above it to limit risk. Profit targets would be previous swing lows or areas where buyers have previously shown interest. This setup works perfectly with the trend structure, selling into a temporary pullback while the overall market shows upward momentum. Scenario 2. Price breaks above $36 resistance. If price breaks above the $36 level, this indicates that buyers have gained control and the resistance might flip into support. In this case, we wait for a retest of the $36 level. During the retest, we look for bullish candlestick confirmation, such as a strong lower wick, engulfing candle, or pin bar. Once confirmed, this becomes a high probability buy setup with targets at previous highs or next liquidity zones above. This approach ensures we are trading with structure, not against it, which increases the probability of success. In summary, Compound is at a critical juncture around $36. The market is in an uptrend, forming higher lows and higher highs, but the $36 resistance level is key to the next high probability move. Here's the plan. If price respects $36, look for a sell. If price breaks $36 and retests successfully, look for a buy. Traders, what do you think? Will sellers continue to defend $36 or are buyers strong enough to push Compound higher? Drop your thoughts in the comments below and let's see who reads the market correctly. All right, traders, that's all for Compound today. Stay patient, watch the key levels closely, trade safe, and I'll see you in the next video.